Action.
All right. And letter F says cash disbursement transactions are recorded on the correct dates. Now for management assertion, that's cut off. It would also be cut off for balance related, but what is it for transaction related? Which is the objective for transaction related? Which is the one most similar to cut off? Timing, yes. There you go, timing. Okay, see what we're getting at with that chapter? How we're trying to create a foundation?
So we are not going to do A and B for 27.
Oh, all you have to do is the BC part.
Oh,
The BC part, you don't have to do the essay on A. That's the part of the meat I want. Okay, now in chapter 7, I like the homework in 7. Again, I'm going to skim over one thing I used to do. Maybe I'll do it if we have time, or if not, maybe I'll do it next week. I used to talk about the audit work papers and how they were prepared at Anderson, which is not the system that's in this text. How we created work papers. But what we have in this chapter, this is a very interesting chapter, is how relevant or persuasive is evidence. I will make some stops here along the way. On page 177, these are some of the factors that we're going to see, remember, on the midterm we talked about. What determines the reliability of evidence? Let's just look through on page 177 some of the factors they have here, because this is a very fascinating chapter, I thought. Independence of the provider. This is the idea that information coming from outside third parties is more likely to be unbiased. Now obviously, it depends who the provider is. In one of the homework problems that I do want to get to today, we talked about where I have a disagreement with the model answer. Talks about going to in-house legal counsel versus external legal counsel. And they want external legal counsel because of independence of the provider, but that's where I think that in-house legal might be more up to date on exactly what's involved in the legal dispute. But normally information coming from outside third parties is more reliable because those people are not biased. Now, do they have the requisite knowledge? That depends. You send confirmations out to lay public, they don't know what the hell's going on. All they know is that there's a line on the account receivable confirmation that says this is not a request for payment. That's all they care about, then they throw it away. One reason Bill doesn't like negative confirmations when we get to that chapter. Effectiveness of clients' internal controls. The stronger the system of internal control, the more likely it is that information generated, even internally, is going to be more accurate, more correct, not misleading. Auditor's direct knowledge. If I do something myself and I trust my own instincts, I feel comfortable with this information. Now, in theory, when you delegate out some information to audit assistants who work for you, you have to review their work. That would give you the auditor's direct knowledge. If a client does a PBC schedule for you, you got to check it, because you don't have direct knowledge until you review it. Qualifications of the individual providing the information. We talked about the gemstones. What about oil and gas, geologists? But that's not a guarantee, is it? So, does the person have the appropriate skills to be able to evaluate? Well, one of the other ones coming up is objectivity. Well, accounting. But some things require some subjectivity. That you could even maybe talk about that with regard to collectability of accounts receivable. You know, having some background on the the customer of your client as to whether or not they are in good financial condition. Degree of objectivity, counting versus subjective determination. They kind of link in together. One of that homework problem talked about what? Determining whether or not there's oil and gas deposits versus counting steel plate. Well, I can count the steel plate, but even with a skilled geologist, there's no guarantee that if we do drilling, we're not going to get a dry hole. Timeliness, again, is something like I mentioned earlier when we did the midterm exam review. When you do something as close as possible to the time of the transaction, the evidence is more likely to be reliable. So I thought, that page is self-evident, but I thought that was a great page. I really enjoyed that page. Now on page 179, one thing is Bill's been with this textbook for years, so it's kind of like an old friend now that I'm reacquainting myself with. They go through different types of evidence. And this is some very interesting reading, again here, that I think is significant. It follows numerous pages. Physical examination. Normally this is looking at a tangible asset that you can touch. So I may go to the factory floor and I actually I'm looking for the stamping equipment. Or I'm looking for the assembly equipment that puts together, maybe it's robotic nowadays, that puts together the particular motor vehicle. Notice the automotive assembly plant in Normal, Illinois now is going to close. Unless they can sell it to somebody to keep it operational, producing a different product. That's going to throw a lot of union people out of work. So physically examining, and one of the problems is, what are some of the things that you can physically examine? Think about that. Confirmation. This was something I put in the online discussion and someone responded, but on page 181, now look at how many items can be confirmed. The normal ones you think of are cash and accounts receivable. But confirmation of insurance policies, confirmation with attorneys. I think this came up in one of the posts. When we go to the acquisition and payment cycle, we'll talk about zero balance confirmations. Because confirmation of accounts payable is the reverse of accounts receivable. For accounts receivable, we are more likely to be overstating balances. For accounts payable, we're more likely to understate balances. So we do zero balance confirmations, for example, where we confirm with vendors that our client has dealt with that we're not showing any balances that are being owed. So look that exhibit over again. There's still some of you still owe me a little bit of posting. I think most people have already posted twice, with one exception. So in filling out your posting. Documentation, here they talk again about internal, external documents. Take a look at that particular distinction as well. And one of the homework problems deals with this, and I want to get to that today. I don't think I'm going to get to all 3 chapters, but worth of homework. But as far as we get today, put that in the Dropbox for the week. There's analytical procedures, of course, again, down here as well. And boy, that's so valuable throughout all areas. It's not just the ratios, it's also the horizontal vertical analysis as well. Now afterwards, and this was part of why they were obsessed with this on the exam, they give some of the reasons behind analytical procedures. Remember, we saw this for understand clients, industry, and business, and at what stages that's involved in.
And that's on page 183?
That's 183. But there's more about analytical procedures elsewhere in the chapters. So that's not the only page you can look at. Inquiries of the client. What are you going to ask the client about? Who are you going to be talking to? A lot of times you'll be talking to the controller if it's a result to financial statement information. But if there's, you might want to talk to in-house legal. If there's some litigation outstanding. If there's some operations issue, you might want to talk to that. A client might have an IT department, might want to talk to them about certain areas. Recalculation. Rechecking a sample of calculations made by the client. Now notice, differentiate that from reperformance. Reperformance is the auditor, it says here, doing independent test of accounting procedures that were originally done. Let me comment on this a little bit too. Recalculation might be just checking math. A lot of that we can do through the software nowadays. In my era, we had to do that manually. Today, for example, I would check the accounting software and I would check it for depreciation. I would not recompute depreciation. But reperformance, we do reperformance in a variety of areas. For example, when we talk next week about internal controls. Client has an internal control involved, let's call, one of the internal controls is internal verification. Internal verification. Where they say, for example, that every requisition form for materials has to be signed off on by one of 4 people who's authorized to review the requisition before they'll approve it. And one thing, I would do 2 things here. One would be I'd look for the authorizing initials or signature on every requisition form. But I'm a little cynical. I'm skeptical. Because I would also be looking at this. I would want to watch this in action. I would want to make sure when that person signed off on the requisition form, did they actually look at it for a few seconds before they signed off? Or were they really busy and they said, just give me the thing and signed off and then not even looking at it? Reperformance, you're often doing what the client claims to have done, and you're doing it on a sample basis. Let's say we're talking about the Jewel, and they have an ad, a sales for this week. And they have with computer scanners that will have supposedly the sales price. And they'll claim that they put the sales prices in there, and somebody internally verified that all the sales prices were put in there with the starting and ending dates. I might go in there and do a sample. I'm not going to check all 500 items that are on sale, but maybe I'll check 30 items. If I find no errors, I'm satisfied. What if I found 5 errors out of the 30 in the sample? Looks like they didn't do a very good job. Maybe I'll extend my sample. Reperformance is doing what the client claims to have done, and we're doing it on a sample basis. Hopefully we don't find that many exceptions, so we won't have to further increase our sample. If we have to increase our sample, it means that this isn't an effective internal control.
Is that the same as just, inventory counting, if they come in?
Yes. We're going to have a big session about the inventory counts, and the auditor does test counts. I'll talk about some personal experiences. You might have some personal experiences in that area as well. And you'll be able to share that both in the class and in the online discussion, yes. Observations. I often kind of smile sometimes, like in the old 40s detective movies, they'd be sitting in some rundown hotel lobby, some detective with a newspaper up with eye holes cut out. So you wouldn't think that they're looking, but they're actually looking through the eye holes where they cut part of the paper out to see what's occurring there in the lobby, or someone they're looking for example, a debtor happens to come into the hotel. So basically using your senses here. And part of the inventory observation that Barry just brought up, the client is the one doing the inventory counting with separate teams. But we're doing test counts and we're doing observation. We're observing them to make sure they're properly following the counting procedures that we should have cleared up the day before. So I thought that part of the chapter was extremely valuable as well. And they give some more examples here on table 7-6. Now, I won't have time to do it today, but I'd like you to read through, and if I have time next week, because I'm going to spend Next week, I'm going to spend a little less time on the materiality and risk chapter, in which you read that. I'd like to spend some time dealing with the audit documentation. That's on pages 188 through the end of the chapter. Back when I taught this course at another institution, we actually did some audit work papers. We had an audit case study, and I actually had students do like a work paper for cash. I think they did the inventory one, and they did accounts receivable. The indexing system on page 192 is not the one that Anderson did, but it does show you how to set up audit files. I'd like to devote some attention to that next week if I could, even though that's in this week's chapter. Also, take a look, and there's a few of these in the textbook. On page 193, here we have an audit work paper. Initially, this could have been a PBC paper, where they're basically showing the notes receivable. We could have the client prepare that. But I want you to look at it, because a lot of you probably, now, Barry probably has some experience with this, but the rest of you may not have. There would be an audit program that would have been prepared, that the person assigned to this work paper would then do the audit procedures, would then use appropriate tick marks here indicating what they did, and would sign off on each step on the audit program. Now, from today's example I gave you of those two prior students, you can take a look at their audit programs. As each step in the audit program was performed, they basically would sign off on the audit program. They would put the schedule on which the work appears, and they would, on the audit work paper itself, would put a tick mark. So take a little bit of a look at that as well before next week, because I want to spend some time on that. All right, I do want to look at some homework in this chapter, however, and then we'll see what the time is to see how much further we can get. I also wanted to go through all my steps for audit planning. Not for the exam, but for real life. And we'll probably do that next week as well, because we had that other work to do today. So let's look at some of the problems now in Chapter 7. I thought this chapter had some interesting problems. Okay, 7-27. Internal or external document, internal or external, page 199. Vendor's invoice, internal or external? Come on, everyone. This is
external.
This is external. It's a bill sent from the supplier to your client. Yes, external. General ledger files.
Internal.
Internal, good. Bank statements.
External.
External. Canceled payroll checks. Canceled payroll checks.
Internal.
That's external, because they're canceled. Now, this goes back more to the days when we didn't have direct deposit, when everyone got a paycheck, and when they cashed the check, it went through the Federal Reserve Bank, when it was marked that it was paid. So being it went through an external source, it's deemed to be external.
Is there a difference between documents like that originally came from the company and went through an external source, and ones that were completely created by external sources?
For this problem, no.
Okay.
As long as they went to an external source, even though they were prepared internally. Payroll time records,
Internal.
internal. Purchase requisition, internal, right, internal. What a amateur book. I just moved this along here. Sorry, Joe. Receiving reports.
Internal.
That's right. I like when they told us what those are, as if we didn't know. Minutes of the Board of Directors.
Internal.
Remittance advices. Now, that's the part like of your credit card bill where it says detach and return with payment.
External.
External. External, right. Signed W-4s.
Internal.
Internal. Internal is correct. Signed lease agreements. External, because that's also in the hands of the lessor. Duplicate copies of the bill of lading.
External.
External. Subsidiary account receivable records. Internal. Canceled notes payable. Canceled notes payable. External. External, because they've been through a third party. Duplicate sales invoices, where we're the seller. Internal. Articles of incorporation. Well, that's external because they're prepared by outside legal counsel. Title insurance policies, external. Notes receivable, external. That's somebody else giving us a note. A customer wrote the note. Very good, very good. Okay. There's a problem I'm waiting for. What's not the next one yet is coming. 7-28. Let's try and get this chapter done and then we'll stop. But Bill wants to go back to this week's stuff next week. 7-28. Here's some audit procedures. Are they physical examination, confirmation, etc.? I'll tell you what, so you don't have to write as much down. As we do each one, we'll put down like number 1 is so-and-so. 1 is physical exam, 2 confirmation, 3 documentation.
Wait.
What? Yeah.
7-28.
You're giving the answers?
No, I'm saying what I'm gonna do is,
We'd put a
rather
number.
than say physical
Oh,
examination,
I'm like, oh.
I'll say number 1 is, for example, all right.
Oh,
there we go.
okay.
So you want to do as much right as what I'm saying. You can type it out if you want to later on. So we're going to look at 1 through 8 at the bottom, and then we're doing 1 through 18. Okay. So number 1, review accounts receivable with the credit manager to evaluate their collectability. So 1 would be,
4.
no, that's analytical procedures, no. We're reviewing accounts receivable with the credit manager.
Oh, physical examination or confirmation?
No, keep going.
Okay, geez, I'm just.
5, inquiries of the client. So 1 is 5. See what I mean? 1 is
Oh,
5.
got it.
Inquiries of the client, that's what I meant. That's what I want. 1 is 5. 2, compare a duplicate sales invoice with the sales journal for customer name and amount.
Re-performance?
I don't know any of these, Bill.
No, it's interesting, by the way, because apparently in the new edition, they don't call it documentation.
Oh.
They call it inspection. But it should be 2 is 3.
Well,
Inspection?
It would have been a little bit more help if it was inspection right here.
Yeah, I know. Okay, that's right. So 2 would be documentation. 2 is 3. Number 3, add the sales journal to, okay, see if something's correctly totaled.
Recalculation.
Recalculation. So 3 is 6. 3 is 6. 4, count inventory items and record the amount in the audit files.
Re-performance?
Physical examination.
That's physical examination. So 4 is 1. Jeez. Number 5, this one's easy, obtain a letter from client's attorney.
Is it confirmation or documentation?
It's confirmation, yes, Amanda's got it. So 5 is 2. 5 is 2. 6, extend the cost of inventory times quantity. That's recalculation. 6 is 6. 6 is recalculation. 7. Okay. Obtain a letter from an insurance company about their coverage.
Confirmation.
Confirmation.
7 is 2. 8, examine an insurance policy.
Inspection?
Inspection again, that's 3, right. 8 is 3. 9, calculate a ratio.
6.
Ratios,
Oh, analytical procedure.
analytical procedures, yes. 9 is 4. 9 is 4, yes. 10, obtain information about internal control by requesting the client to fill out a questionnaire. You're asking the client.
Documentation?
5, inquiries.
Increase, right. 10 is 5. Increase of the client. 10 is 5. 11, trace the total of the cash disbursements journal to the general ledger. This, by the way, would be done by computer today. It's 7. 11 is 7. It's reperformance. 11 is 7. 12, watch employees do stuff.
Physical examination?
No,
No?
but
Was there
same
an 8?
idea. Go ahead.
Oh,
8?
yeah.
8 is right, yes, you are correct. It's 8. 12 is 8, observation. 12 is 8, yes. Okay, 13, examine a piece of equipment.
Physical
Inspection?
examination.
Oh.
Physical examination. 13 is 1. 14, do another ratio.
4.
4. 14 is 4. 15, examine the corporate minutes. That's 3, documentation inspection. 3, documentation or inspection in the new edition. Okay, 16, you get a letter from management stating, oh, this we'll talk about at the week 7. You always get a management representation letter stating there's no unrecorded liabilities.
Confirmation.
It's increase of the client again. 16 is 5. 16 is 5. You review a total of repairs and maintenance for each month to see if any month has unusually large amount.
One.
No.
3.
It's like horizontal vertical analysis. It's analytical
Oh,
procedures.
right.
17 is 4. 17 is 4. And you're getting a written statement from the bank. 18 is
1.
2.
2, confirmation. 18 is 2. So 1 was 5, 2 is 3, 3 is 6, 4 is 1, 5 is 2, 6 is 6, 7 is 2, 8 is 3, 9 is 4, 10 is 5, 11 is 7, 12 is 8, 13 is 1, 14 is 4, 15 is 3, 16 is 5, 17 is 4, 18 is 2. Whew. Okay, 7-33. Oh, by the way, 7-31, by the way, that one I usually don't go over in class. 7-31, they want to know what are the accounts that can be confirmed. Let me just give you the account names, and you can indicate from whom you confirm them and what you're confirming. Okay, for 7-31, cash and bank. Cash and bank. Trade accounts receivable. Trade accounts receivable. Notes receivable. Notes receivable. Inventories. Inventories. Trade accounts payable. Trade accounts payable.
Counts.
Payable. Mortgage payable. Mortgage payable. Capital stock. Legal fees. Legal fees. And there may be sales and expense accounts. Sales and expense accounts, but you don't have to complete that one. But just a short summary, like legal fees, attorney letters from attorneys, requesting information about any potential litigation or existing litigation. Okay, 7-33, and then we'll wrap up. This one, they want us to indicate Again, I'm just basically in 7-33.
You said 7-33?
7-33, and I gotta check my reconfirmation here again.
Oh, we just did
My-
7-33.
All right.
The last one we did was 31, yeah.
Okay, got it.
33 is, okay, I see it's over here. Same problem number, but in a different order in this new edition. Okay, we're supposed to indicate we're going to read an audit procedure. We're going to indicate what the balance, what the type of physical evidence is, what's the balance-related audit objective, and then I'd like to finish up with 7-34, which evidence is more reliable. Okay, number one, this is 733 and then 734 and then home. 733, audit procedures. Test, extend unit price times quantity on the inventory list, test foot the list, and compare the total to the general ledger. That would be recalculation, type of audit evidence, recalculation, and the balance-related audit objective. Now, this is not transaction-related. This is, if it were transaction-related, it'd be posting a summarization. Detailed tie-in, detailed tie-in. Number two, trace selected quantities on the inventory list to the physical inventory to make sure it exists. Make sure it exists, and the quantities are the same. Type of audit evidence, physical examination. Physical examination. And balance related, they have two down actually. I thought of existence, because they want us to make sure it exists. Also accuracy, existence and accuracy. 3, question operating personnel about the possibility of obsolete or slow-moving inventory. Inquiries of the client. Now they want balance related, realizable value for Part B.
What was the first one?
Inquiries of the client.
Okay.
But again, look these over after class too, because you're just getting familiar with these now. This is all new to you. Number 4, select a sample of quantities of inventory in the warehouse and trace these to the inventory count sheets to make sure they've been included and they have the correct description.
Physical
That's
and
physical examination, good. Physical examination. And 2, balance-related audit objectives. Completeness and accuracy. Completeness and accuracy. Number 5, compare the quantities on hand and unit prices for this year's inventory count sheets with those from the preceding year as a test for large differences. The type of audit evidence, analytical procedures. Analytical procedures, the balance related, accuracy. Accuracy. 6, examine sales invoices and contract to customers to determine if any goods are out on consignment. Similarly, examine vendors' invoices and contracts with vendors to determine whether any goods on the inventory listing are owned by vendors, the reverse. Now, this is inspection or documentation. It's inspection in the new edition. And for the balance-related audit objective, we're seeing if this is our merchandise or if it's on consignment, rights and obligations. Rights and obligations. And number 7, then we'll do our recessional hymn. Set, and remember, this is all you have to put into the Dropbox. We'll do the chapter 8 stuff, and I want to do more in 7 next week. Send letters directly to third parties who hold the client's inventory, request that they respond directly to the auditors.
Inquiries of the client? No?
No, because you're getting this from third parties.
confirmation.
Confirmation. And for the balance-related audit objectives, they have 3. Existence, completeness, accuracy. And finally, my favorite problem, and this then will go home, and I'm only interested basically in part.
Sorry, what was it?
Existence, completeness, and accuracy. Again, look that kind of problem, because you're just getting familiar with those objectives. Look those over for everything we did today. They're still going to be alien, but hopefully they'll sink in. 7-34, I'm interested basically in part B and C. 7-34, part B and C. We're supposed to indicate which of the two, there's only 9, is more reliable, and what's the factor. These are those factors that we talked about earlier today. I disagree with one of the answers. All right, number 1, this is 7-34. Confirm receivables with consumers versus confirm receivables with business organizations. Which is more reliable, 1 or 2?
2.
2, confirm with business organizations. Reasons, qualifications of the provider. Qualification for the provider. A business organization is going to have people like yourselves who have education. Layperson on the street don't know what's going on.
So you just want us to write 2 and then put the
Put down confirmation with business organizations for B. You might type it out, what the heck. C, qualifications of the provider. 2, physically examine 3-inch steel plates versus examine electronic parts.
Steel plates?
Physically examine 3-inch steel plates, yes. Reason? I disagree with their answer.
Plates?
Well, they have, for their answer, they have qualifications of the provider. I would say objectivity. Objectivity. So you can put theirs down, but put mine down too. Because you look at electronic parts, do you know if this chip is obsolete? This computer chip? No, but do you know if there's 3 steel plates there? Yes. So Bill disagreed already. He thinks it should be objectivity. Okay, 3. Examine duplicate sales invoices when several competent people are checking each other's work versus examining documents prepared by one competent person on a one-person staff. The first one, examine documents when you have several people involved. Reason, effectiveness of internal control. Effectiveness of internal control. 4,
What was the first one? Sorry, I didn't get that.
examine duplicate sales
examine.
invoices where several competent people were checking each other's work. Number 4, physically examine inventory of parts for the number of units on hand versus the examining them for the likelihood they're obsolete. And which would be? First one, examine inventory of parts for the number on hand. This time I agree with their answer, degree of objectivity. Degree of objectivity. 5, discuss the likelihood and amount of loss in a lawsuit against the client with client's in-house legal counsel versus discussion with the CPA firm's own legal counsel. This is the one I disagreed with. Their answer is outside legal counsel, and the reason is independence of the provider. Outside legal counsel, independence of the provider. You can put that down in your homework. I personally think that you'd be better off talking in-house legal counsel, but put their answer down. 6, confirm the oil and gas reserves with the geologist specializing in that area versus confirming a bank balance.
The first one.
Second one, even geologists are not guarantors. Confirm a bank balance, reason, degree of objectivity. Degree of objectivity.
What was the reason on the question before?
Independence of the provider. But I said that with a frown, remember. Everyone up to date? We're almost there.
Yep.
7, confirm a bank balance versus examining clients' bank statements.
Confirm a bank balance.
Confirm a bank balance, independence of the
Independence.
provider. Confirm a bank balance. Next week, we're gonna do the cash chapter, and there's a standard bank confirmation form that's in one of the pages of the text. 8, physically count the client's inventory held by an independent party versus confirming the account with an independent party. Physically count. Reason, auditors' direct knowledge. Auditors' direct knowledge. But just between us, either one of those is pretty good. So you physically count, auditors' direct knowledge. And number 9, obtain a physical inventory account from the client company president versus physically counting the client's inventory.
Physically.
Same thing as 8.
Yeah, physically count the inventory, auditors' direct knowledge. They also put down independence of the provider, but auditors' direct knowledge. Now,
No,
next
they're
week-
calling the auditor independent of.
Yeah, auditor's independent also, but that's true in everything, I hope. We'll do I want to go back to chapter 7 a little bit next week. We'll also go into chapter 8. We're going to pass over 9 a little bit more. Read 9 more carefully, because I'm not going to say as much in class. I do want to spend a lot of time on 10, and we'll also get caught up, because we'll go through 23. All right, everyone, thank you, as always. Take a look at some of those objectives, though, again, and things. This is a good foundation week. Start on the midterm stuff. Whatever. The work never ends, you know that.